In today's video, we'll delve into 3 promising growth stocks that could potentially boost your portfolio. These companies are excelling in their respective industries and have the potential to deliver above-average returns. But here's something that might surprise you. One of these companies has seen its stock price surge by an incredible 1,600% over the past decade, and yet it might still be undervalued. Intrigued? Stick around, because we're about to reveal some hidden gems that could be game changers for your portfolio. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. The stock market has a long history of delivering solid returns, with an average annual return of about 10% over the decades. This performance is impressive enough to double your investment every 7 years. But what if we told you that you could grow your money even faster with carefully selected growth stocks? That's where the magic of growth investing comes in. By choosing the right companies, you can potentially achieve above-average returns and accelerate your path to financial independence. Let's start with On Holding, ticker ONAN, a company that's quickly becoming a household name in the world of athletic footwear and apparel. On Holding has made a name for itself by challenging industry giants like Nike and Lululemon Athletica. What sets On Holding apart is its commitment to innovation and quality, which has earned it a loyal following among consumers who value premium products. In the second quarter of 2024, On Holding reported remarkable financial results. The company saw a 29% year-over-year increase in sales, which is impressive given the current economic environment. Even more noteworthy is the company's profitability, with a gross margin expanding to 59.9% and net income skyrocketing by 834%. These numbers are a testament to On Holding's ability to navigate challenges and continue growing despite headwinds like inflation. To further analyze On Holding's potential, it's essential to look at the 50-day and 200-day exponential moving averages, EMAs. If the 50-day EMA crosses above the 200-day EMA, it's a bullish signal, often called a golden cross, suggesting that the stock is in an upward trend. Additionally, the Relative Strength Index, RSI, can help determine if the stock is overbought or oversold. An RSI above 70 may indicate overbought conditions, while below 30 could signal oversold conditions and a potential buying opportunity. Pairing these indicators with On Holding's strong gross margin and revenue growth can provide a clearer picture of its momentum. While On Holding missed its earnings per share (EPS) target by a penny, reporting 17 cents instead of the expected 18 cents, Wall Street remained bullish on the stock. This resilience in the face of minor setbacks speaks volumes about the company's growth potential. On Holding is still in the early stages of its growth journey, with plenty of room to expand its brand presence globally. For those closely monitoring market sentiment, the moving average convergence divergence, MACD, can be a helpful indicator. A bullish MACD crossover, where the MACD line crosses above the signal line, might suggest a good entry point. This, coupled with the Bollinger Bands to assess the stock's volatility, especially if the price touches the upper or lower bands, can provide additional insight into when to buy or hold On Holding stock. One of the key drivers of On Holding's growth is its multi-channel sales strategy. The company is increasing its footprint through direct-to-consumer shops and wholesale distribution deals, ensuring that its products reach a broad audience. On Holding's marketing efforts, coupled with its unique product design, like the distinct sole of its shoes, have made it a favorite among fashion-forward consumers. But it's not just shoes that are driving On Holding's growth. The company's apparel and accessories lines are also gaining traction, with apparel sales growing by 66% year-over-year in the second quarter of 2024. On Holding is capitalizing on this momentum by launching new collections and partnerships, such as its collaboration with celebrity Zendaya. This focus on expanding its product offerings and brand appeal positions On Holding for continued success in the coming years. On Holding is projecting full-year sales growth of at least 30%, which has been well received by the market. Additionally, the company is implementing new efficiency models in the second half of the year to further bolster its profitability. Given its strong financial performance and growth prospects, On Holding is a stock that investors should keep on their radar. But before we continue, here's a question for you. If you had to choose, which stocks would you buy and hold forever, and why? Share your picks in the comments. Now let's shift our focus to MercadoLibre, ticker MELI, a company that has been a powerhouse in the Latin American e-commerce and fintech markets. MercadoLibre has delivered exceptional returns to shareholders over the past decade, with its stock price increasing by a staggering 1,600%. Despite this impressive run, the company remains undervalued, presenting a compelling opportunity for growth-minded investors. MercadoLibre operates a diverse business model, generating revenue through its online marketplace, fintech services, and in-store transactions. The company's marketplace platform connects buyers and sellers, earning transaction fees in the process. Additionally, MercadoLibre sells products directly to consumers through its own fulfillment system, further enhancing its revenue streams. MercadoLibre's PS ratio of 5.6, which is below its 10-year average, suggests the stock might be undervalued. Analyzing its EMA trends could provide insight into whether whether the stock is trending upwards, and combining this with RSI levels can help determine if it's in an overbought or oversold state. Given the significant revenue growth of 113% year-over-year, these technical indicators could offer a clearer picture of MercadoLibre's potential future performance. One of the most exciting aspects of MercadoLibre's business is its fintech division, which is growing rapidly. The company's fintech services include digital payments, lending, and other financial products, which are increasingly popular in Latin America's underbanked population. This growth is reflected in MercadoLibre's gross merchandise volume, GMV, which saw significant increases in key markets like Brazil and Argentina. In the second quarter of 2024, GMV in Brazil grew by 36% year-over-year, while Argentina reported an astonishing 252% increase. MercadoLibre is also expanding its logistics capabilities to support its growing e-commerce business. The company recently opened a new fulfillment center in Texas, aimed at improving product availability and delivery times for customers in Mexico. This strategic move highlights MercadoLibre's commitment to enhancing customer experience and driving long-term growth. To further evaluate MercadoLibre's stock movement, the MACD indicator can be invaluable. Look for a bullish MACD crossover as a potential buy signal, particularly if supported by Bollinger Bands indicating low volatility. This combination can be effective in timing entries or exits in the stock. Despite its impressive growth trajectory, MercadoLibre's stock is currently trading at a price-to-sales (PS) ratio of 5.6, which is below its 10-year average of 10. In the most recent quarter, MercadoLibre reported a 113% year-over-year increase in revenue, excluding currency fluctuations, underscoring its ability to continue delivering strong returns to shareholders. For investors looking to capitalize on the growth of e-commerce and fintech in Latin America, MercadoLibre is a compelling option. The company's diverse revenue streams, strong market presence, and commitment to innovation make it well-positioned to thrive in the years ahead. Finally, let's talk about Dutch Bros, ticker Bros, a fast-growing drive-thru coffee chain that has been making waves in the restaurant industry. Dutch Bros has quickly gained a loyal customer base thanks to its unique blend of coffee, friendly service, and convenient drive-thru locations. The company's growth story is just beginning, with plenty of opportunities to expand its footprint across the United States. In the second quarter of 2024, Dutch Bros reported strong financial results, with revenue increasing by 30% to $325 million. The company also saw same-store sales grow by 4.1%, a key metric for evaluating the performance of retail and restaurant businesses. Dutch Bros' profitability also improved, with GAAP net income more than doubling to $22.2 million. To better understand Dutch Bros' stock trends, investors can monitor the 50-day and 200-day EMAs for signs of a bullish trend continuation or potential reversal. Additionally, the RSI can signal overbought or oversold conditions, helping to identify potential buying or selling points. Despite these positive results, Dutch Bros' stock took a hit following the earnings report, dropping 20% on August 8th. The sell-off was triggered by the company's announcement that new store openings for the year would be at the lower end of its guidance range of 150 to 165 locations. However, this update does not indicate any long-term issues for the business. It's likely due to temporary delays in construction or permitting, common challenges in the retail industry. What's important to note is that Dutch Bros raised its full-year revenue guidance from $1.222 billion to $1.23 billion, reflecting the company's confidence in its growth prospects. The market's reaction to the slight slowdown in store openings seems excessive, given that Dutch Bros is still on track to deliver strong financial performance. Let's take a closer look at our table. On holding, MercadoLibre and Dutch Bros each present strong growth potential, but with distinct characteristics. On holding excels with a high gross margin of 59.97% and solid EPS of 53 cents, driven by its premium branding in the athletic apparel market. MercadoLibre, a leader in Latin American e-commerce and fintech, boasts impressive revenue of $14.47 billion and a robust EPS of $27.66, though it faces macroeconomic risks. Dutch Bros, a smaller player with a $4 billion market cap, is rapidly expanding in the competitive coffee industry, showing steady revenue growth, though its lower gross margin of 26.38% reflects the challenges of the sector. Each stock offers unique opportunities, but investors should weigh the risks, particularly in competitive and volatile markets. In conclusion, On Holding, MercadoLibre, and Dutch Bros are three growth stocks with the potential to deliver above-average returns to investors. Each company operates in a different industry, but they all share a commitment to innovation, customer satisfaction, and long-term growth. By adding these stocks to your portfolio, you could benefit from their continued success and enhance your path to financial independence. And before we wrap up, let me leave you with this. If you could only invest in one sector for the next 10 years, which one would it be? Comment your thoughts below. If you found this video helpful, please give it a thumbs up and subscribe subscribe to our channel for more investing insights. And remember, this video is for informational purposes only and does not constitute financial advice. Always do your research before making any investment decisions. Thanks for watching, and we'll see you in the next video.